Stock futures dip as retail earnings trickle in. Traders brace for Powell's speech. Live updates. The financial markets are bracing for a pivotal week as retail giants release their earnings and investors look to the Federal Reserve for direction. On the trading floor of the New York Stock Exchange, a trader diligently monitors the market on August 4, 2022. The scene sets the stage for a week filled with anticipation and uncertainty. As of Tuesday, stock futures are showing slight declines, with the Dow Jones Industrial Average futures slipping by 2 points, hovering just above the flat line. Futures for the S&P 500 and NASDAQ 100 are both down by 0.1%. Home Depot, a leader in home improvement, saw its shares edge lower following the release of its second quarter earnings, which came in slightly under expectations. However, the company maintained its optimistic full-year outlook. This week, other major retailers, including Lowe's, Walmart, and Target, are set to report their earnings, adding to the market's focus on consumer behavior. These earnings reports are crucial as investors seek insights into how consumers are coping with fluctuating inflation rates and shifting U.S. trade policies. But here's where it gets controversial. Some analysts argue that these reports might not fully capture the long-term impact of these economic factors, leading to potential misinterpretations of the data. Adding to the market's anticipation, Federal Reserve Chair Jerome Powell is scheduled to deliver a keynote address later in the week. The global central bank community will gather in Jackson Hole, Wyoming, for the Fed's annual economic symposium. Powell's speech is expected to provide clues about the Fed's future monetary policy, particularly regarding interest rate adjustments. We anticipate that the Federal Reserve will use the Jackson Hole Symposium as a platform to prepare the markets for a potential 25 basis point rate cut in September, and a generally accommodative stance through the end of the year, explained Richard Saperstein, Chief Investment Officer at Treasury Partners. He also noted that, given this will be Powell's final Jackson Hole conference as Fed chair, he may emphasize the importance of the Fed's independence from political pressures. According to CME's Fed Watch tool, there is currently an 83% probability of a quarter-point rate cut at the Fed's next policy meeting in September. Tuesday's market movements follow a relatively calm session on Monday, with the S&P 500 closing just slightly lower, maintaining its position near a record high reached last week. And this is the part most people miss. While the broader market seems stable, individual stock performances can offer deeper insights into specific sectors and companies. For example, Evercore ISI recently upgraded construction equipment company Caterpillar to outperform, predicting a potential 15% upside. Shares of Caterpillar gained 1.8% following the upgrade, reflecting investor confidence in the company's ability to navigate challenging conditions in the construction industry. However, not all companies are faring as well. Home Depot's shares fell nearly 2% in pre-market trading after the company reported weaker than expected second quarter results. Despite the miss, Home Depot maintained its full-year outlook, suggesting that the company remains confident in its long-term strategy. In Europe, defense stocks took a hit after U.S. President Donald Trump promised Ukraine security guarantees during talks in Washington. This news raised hopes for peace in Ukraine, but led to a 2.2% drop in the stock's Europe Aerospace and Defense Index. Companies like Renk, Leonardo, Hensoldt, and Saab saw significant declines, with some falling by more than 6%. Meanwhile, Japanese conglomerate SoftBank announced a $2 billion investment in Intel, causing Intel shares to jump more than 5% in extended trading. This move underscores the ongoing interest in the tech sector, despite broader market uncertainties. On the other hand, Meta Platforms, formerly known as Facebook, has seen a substantial increase in short interest, with S3 Partners reporting a 75% rise in notional short interest, totaling $11 billion. Reasons for shorting Meta include concerns over heavy spending on AI and the metaverse, trade risks, growth slowdown, and a weakening ad market. Finally, cybersecurity firm Palo Alto Networks saw its shares surge more than 5% in extended trading after beating Wall Street's quarterly estimates and issuing positive guidance for the upcoming quarters. The company also announced plans to acquire CyberArk, a significant move in the cybersecurity space, and the retirement of its founder and CTO, Nir Zuk. What do you think about the market's reaction to these events? Are you bullish or bearish on the sectors mentioned? Share your thoughts in the comments below.